Welcome back to AlgoBot, your friendly guide to automated trading strategies for MetaTrader 5. I'm AlgoBot, and in today's video we're taking a close, educational look at an expert advisor called Quasimodo Divergence Reversal. This strategy blends a classic price structure pattern, the Quasimodo or over and under reversal, with a momentum check from the relative strength index. Over the next few minutes, you'll learn how it locates swing points using non-repainting fractals, how it compares price against momentum to spot a possible turn, and how it manages its stop loss and take profit. Let's get started, and remember, this is educational information only. So what exactly does this expert advisor do? At its core, the Quasimodo Divergence Reversal is a counter-trend or reversal strategy. Rather than chasing a move in the direction it's already going, it looks for moments where a trend may be running out of steam and preparing to turn. It does this by combining two ideas that many discretionary traders use by eye, and it automates them with strict, repeatable rules. The first idea is market structure. The strategy maps out the swing highs and swing lows on your chart using 5-bar fractals. A fractal is simply a local peak or trough, a candle that stands out above or below its immediate neighbors. Because it waits for the pattern to fully form before confirming it, these swings do not repaint, giving you a stable picture of structure. The second idea is momentum, measured by the relative strength index. Every time a new swing forms, the EA asks a simple question: are price and momentum agreeing or disagreeing? When price reaches a new extreme but the RSI fails to follow, that divergence hints that the pressure behind the move is weakening. This approach is designed with reversal-minded traders in mind, the kind who like to look for turning points at the edges of a move rather than in the middle of a trend. According to the notes in the strategy, it's aimed at foreign exchange majors and gold, on timeframes from 15 minutes up to 1 hour. It's a single-position strategy, meaning it focuses on one clean setup at a time rather than stacking trades. As always, keep in mind that no approach works in every market condition, and this material is for education only, not a promise of any particular outcome. Let's walk through how the Quasimodo Divergence Reversal Expert Advisor makes its decisions step by step. Everything begins with locating swing points on the chart. The strategy uses 5-bar fractals, which means it looks for a candle whose high stands above the two candles on each side of it for a swing high, or whose low sits below the two candles on each side for a swing low. Because the center of that 5-bar pattern sits 3 bars back, the swing is only recognized once those later candles have closed. That design choice means the signals do not repaint, so a swing that appears will still be there tomorrow. Each time a new swing high forms, the EA compares it with the previous swing high. For a short setup, the strategy is looking for a failed push higher. Price makes a higher high than the last swing high, but the relative strength index, calculated over 14 periods by default, prints a lower high at that same point. That mismatch between rising price and easing momentum is what traders call bearish divergence. To make sure the move is meaningful, the EA requires the new high to exceed the previous high by at least the MinBreakAtr setting multiplied by the current average true range, which defaults to 0.3. When those conditions line up and no position is already open, the strategy signals a sell. The long side mirrors this exactly. Each new swing low is compared with the previous swing low. Price makes a lower low, but the RSI prints a higher low, which is bullish divergence. Once the new low clears the previous one by the required ATR-based distance, the strategy signals a buy. Now for risk management. On a short, the stop loss is placed above the fresh swing high by the ATR stop value times ATR, which defaults to 0.6. On a long, the stop sits below the fresh swing low by that same buffer. The distance between entry and stop becomes the risk. The take profit is then set at the reward risk multiple of that risk, which defaults to 1.8. So the profit target is roughly 1.8 times the size of the stop distance. The EA also checks that the spread is within the max spread PTS limit before entering, and it allows only one open position per magic number. Fixed lot sizing keeps each position the same size, so the risk is consistent from one setup to the next. Let's read through the core of the MetaQuotes language code, just as you'd see it in MetaEditor. At the top are the input parameters you can adjust. RsiPeriod sets the RSI length at 14. MinBreakAtr 0.3 controls how far price must break beyond the previous swing. ATR period and ATR stop govern the average true range and the stop buffer. Reward risk, 1.8, sets the profit target relative to risk. Max spread PTS caps the allowable spread, lots fixes the position size, and magic tags the EA's own trades. Below that is the sell block. When an up fractal is confirmed, the code reads the swing high into price and the RSI value at that swing into RSI. It then checks that we already have a previous swing high stored, that the new price is above the previous high plus MinBreakAtr times ATR, and that the RSI is below the previous swing's RSI. If we're flat and the spread is acceptable, it calculates the stop above the swing and calls send with an order type of sell, placing the take profit at reward risk times the risk below entry. The buy block is the mirror image. When a down fractal is confirmed, it checks that the new low is below the previous low by the ATR-based distance, and that RSI is now higher, which is bullish divergence. It then sets the stop below the swing and calls send with an order type of buy. Finally, the send helper does the actual order placement, calling trade.sell for shorts and trade.buy for longs, each with the normalized stop loss and take profit. That's the whole engine in a nutshell. Let's bring the logic to life on this illustrative chart. Across the top you can see the price candles, and in the panel below sits the 14-period RSI, our momentum gauge. Watch how the two work together. In the opening candles, price is drifting lower. It carves out a first swing low, and I've marked the level of that prior swing low near 1.0845 with a dashed line so we can measure against it. At that first low, notice the RSI down in the lower part of its range. Price then bounces for a few candles, pulls back, and heads down again toward that earlier low. Here is the heart of the setup. On the sixth candle, price dips just below the prior swing low near 1.0845, forming a fresh, confirmed 5-bar fractal low. In pure price terms, that's a lower low, which on its own looks bearish. But look at the RSI panel underneath. At this new, lower price low, the RSI has actually turned up and printed a higher low than it did at the first swing. Price is going lower while momentum is going higher. That disagreement is bullish divergence, and it's exactly what this strategy is built to detect. Because the low cleared the previous one by the required ATR-based distance, and because we were flat with an acceptable spread, the strategy signals along. You can see the buy entry marker at that fresh low, with the protective stop tucked just below it by the ATR buffer. Now follow the outcome. Over the next candles, price stops falling and begins to climb. Each candle builds on the last, and the RSI rises with it, confirming that momentum has swung back in the buyer's favor. Price runs all the way up to the take profit marker, set at roughly 1.8 times the distance between entry and stop. That's the long trade complete, and it shows the reward to risk idea in action. The target sits well above the entry relative to where the stop was. But price keeps pushing higher, and that sets up the opposite trade. Price rallies into a first swing high, and I've drawn the prior swing high near 1.0898 as a dashed reference line. At that first peak, the RSI is riding high in the upper part of its range. Price then eases back for a couple of candles before making one more thrust upward. Watch the 14th candle closely. Price pushes above the prior swing high near 1.0898, printing a fresh, confirmed higher high. On the surface that looks strong, like the uptrend simply continuing. But glance at the RSI again. At this new, higher price high, momentum has faded, and the RSI prints a lower high than it made at the first peak. Price is making a higher high while momentum makes a lower high. That's bearish divergence, the short mirror of what we just saw. With the break beyond the previous high satisfying the ATR filter, and with no position open, the strategy signals a short. The sell entry marker appears at that fresh high, and the stop is placed just above it by the ATR buffer. From there, price rolls over. The failed push higher gives way, candles turn down, and the RSI slides lower alongside them. Price falls to the take profit marker below, again set at the reward to risk multiple of 1.8. That completes the short trade. So in one sequence you've seen both halves of this strategy, a lower low with a higher RSI low signaling a long, and a higher high with a lower RSI high signaling a short, each managed with an ATR-based stop and a reward to risk target. Divergence, not price alone, is what does the talking. And that brings us to the end of our educational walkthrough of the Quasimodo Divergence Reversal Expert Advisor. We covered how it finds swing points with non-repainting 5-bar fractals, how it compares price against the RSI to spot bullish and bearish divergence, and how it manages every position with an ATR-based stop loss and a reward to risk take profit. Remember, everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. Trading involves real risk, and losses do happen. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe for more MT5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.